The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 535. Nasdaq is off 173. S&P's down 76. Gold contract down $16.70, trading at $17.52 an ounce. We got silver off 41 cents, $15.71 an ounce. Light sweet crude up a nickel, $20.15 a barrel. Notes and bonds. You get the 10-year up 26 ticks, trading 139 flat. The 30-year up 2 points plus 20 ticks at 180.10 in King Dollar. King Dollar's the culprit out here, folks. You're up a full 1,000 ticks, 99,887. S&P can't stand it. Euro's at 108. The yen is at 107.71, and the British pound is at 124 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good morning. It's going well. How are you doing?
Good, man. Good. So let's take a look at this S&P. What's intriguing here, folks, with this S&P, it's going to need a lot more than this to basically get below this 80 bucks on the way down. What you have here, this is really intriguing, actually. The first bar, this is telling me that we actually want to run up to this 27.81 once again, and we're at 27.65. You had a little pop up there. Didn't take out a swing point, but you had the pop. And you don't have enough sellers on the way down. So this is going to be intriguing watching this shake out. If you go over and take a look at the SPY, what you're going to see with the SPY is that it's refusing to go into the gap higher from yesterday. And you're going to see this is laying out here. You came back. You almost finished off. Okay, so you finished, let's see, 276. Yeah, 276 is the high, and that's how we gapped higher. So you come back in, you just about filled the gap. We had 276.33, and from there it's, we'll see how this shakes out, but it's going to need a lot more power in order to get the lower price out here. So
yeah, it's just a reminder though that there's going to be some negative days, I think, to say the least, as this comes, man. As things were even accelerating during my show. And coming up to my show, I mean, you had the S&Ps at almost 2,800, right, at 7:30 a.m. And by 9 a.m., you were trading at 27.55. So it's like, I wonder if things are going to accelerate into the open. They did bounce, but you were down about 3% there.
Yes.
And I said to myself, maybe there's a chance that it will get close to like limit down, which you wouldn't have thought at the end of trading day yesterday. But guess what? It crept up, and it was definitely possible. But it didn't happen, of course. But just big moves, man, in both directions. Still, with the VIX now, I think, back above 42-ish. We were in the 37s yesterday. 42.65 right now. Yeah.
And if you take a look at this market, so what happens, folks, is that when ABC structures finishing the way up, the bottom line is that they got to take a break. We got the price projections inside the NASDAQ, inside the Qs. The price projection was 210. It got to 212.50. Bottom line, you're pulling back. Same setup inside the Qs, though. The bottom line of the Qs, what's intriguing about the Qs, I don't think they even filled the gap. The Qs aren't even going under the gap higher yesterday. That gap higher was 206.42. So this is going to be intriguing watching this shake out, because that's telling me that this thing's going to try to claw back. And that would be really unusual in the context, folks, that you finished an ABC structure up. You have Europe that's still down. This is pretty impressive, man. I'm digging it. And if you're in the gold market, the bottom line is that these gold stocks have already rejected lower price, which is pretty amazing in the context that dollar is up it's up 1,000 ticks, man. So.
Jumping back to the NASDAQ, man, it is remarkable how strong it's been. Amazon, a couple of huge days at all-time highs right now for sure. But I have the chart up there. I mean, talk about blowing past even. Just it's stark how much of the retracement the NASDAQ has already gotten back, man. On a chart-wise, from 66.28, we're trading almost 2,000 points higher on the NASDAQ 100. And, the 618 was 85.65. And, we were up as high as 80, 710, so 150 points in the NASDAQ 100 above the 6618. So just so much strength there for sure.
And so you want a bizarre number, folks? Okay, this is when we were closing the day yesterday, Tom, right?
Yes.
Up in the office, I was talking, and I says, oh, man, I says, look at this number, folks. This is pretty sick. So if you go year to date, which, funds are going year to date,
Sure.
well, where are we? Well, guess what? The NASDAQ closed at the open of January 1st.
And just to add, I didn't even realize it was right back there. That's even.
That's crazy. I know.
Yeah, it's even
2nd.
crazier.
Yeah. Right.
And all you're saying is grade me on the 2020 calendar year after you probably made 30% if you just bought the SPY in 2019. So of course that's super fair, right? In terms of if 2020 can be anywhere near even after 2019 had 30% returns, and somehow this is what happened. That's a remarkable thing for strength in there. Yeah,
it's crazy. And of course, Amazon, folks, is already. You want to pay attention to what's happening out here because this is fast and furious, man. Amazon's already rejected its lower price.
Yeah, Amazon higher again today.
Amazon just went from $22.45 to $22.85 just since we've been on the air.
It's huge, man. I know, and that's
oh my God,
it is.
So let's take a look at some of these banks. You had Goldman come out. It was intriguing when I was listening to your show that they between Goldman and what Citi was the exact same amount of basically profit that they lost. Was it 36% or something?
It was. Their profit decline was 46%. So you had Goldman profit tumbling, you had Citi first quarter profit tumbling, and then you had Bank of America 45%. So somehow they all lost 45 to 46% of their profit. That was the decline in their profit.
Yeah.
But just that's the headline across the board for those banks. Yeah.
So in Goldman's case, folks, it's already rejected 169. Yeah. You're at 176. And what you want to be looking at out here is that what is the volume characteristic going to be at the end of the day? Because if we have out here, if you have that we already got lower prices. If you have the contraction of volume and you get any type of rejection of lower price, guess what, man? You're going higher once again. The gold contract, of course, if we take a look at that got hit nice. That being said, this gold contract looks like it set up another ABC structure on the way up. We got this down to 1731 last night. You're doing 125,000 contracts, yet you're going into, let's see if it was 219. That means it has to slow down a bit. But you already got that rejection at 1731. You're at 1753. If you take a look at some of these equities, my take is that they should have been down a lot more than they were. An Eagle is down all of 9 cents. You get Barrick. I think Barrick already rejected lower price. Yeah, Barrick was down at 23.45. You're at 24.25. Newmont. And you got to remember something, folks. These things have been on a tear on the way up. Newmont's traded down to 57.82. Now you're 58.39. 91. So bottom line is that there's action out there. The dollar is a problem for the S&P. And it's pretty cool. We're going to have Teddy Kegstad on at 40 past today. So yes. We'll see what he has to say. Dow Industrials right now down 580. NASDAQ off 167. S&P's off 78. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. TFNN is launching an open house for our Tiger's Den. For a limited time, you can get a 30-day free trial to the Tiger's Den. Just enter promo code OPEN at checkout and pay nothing for 30 days while you try out your Tiger's Den membership as part of our open house. With market volatility at an all-time high and people all over the world working from home if possible, TFNN is hosting an open house in our Tiger's Den. The Tiger's Den is an interactive chat room that runs all day where other tigers and tigresses discuss trading ideas with the hosts and members, along with charts and current market news, as well as live access to the charts the hosts use during their programs. Join us for the Tiger's Den Open House. Begin your Den membership today by just entering OPEN at checkout and pay nothing while you try things out for 30 days. For all the details and to start your Den membership today, visit the front page of TFNN.com. Don't miss out on the TFNN Tiger's Den Open House taking place now. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow down 659, Nasdaq's off 185, S&Ps are off 87, and right now we're pressing those lows, folks. First low that was generated out here was 9 o'clock this morning, which was at 2754. We just came down to 2754.50. We'll see where this baby shakes out. And Wednesday, Tom, right? It's Prince Spaghetti Day, and it's also Oil Day.
That's right, man. How about an oil market for us? We're at basically 2002 prices with a 19 handle earlier, back below 20 right now at 1939. We'll get the EIA numbers at 1030. Could you pull up the whisper number and see what we're looking for?
Yeah.
I'm going to jump over and take a look at what kind of options, what kind of premium they're pricing in. So if the contract's 7 pennies under $20 right now, jumping around to some of these contracts to see if we have 20 as a price point. So 20 doesn't really line up. The closest thing maybe is 2025, which expires at noon. So $20.25. And let's see what on the bullish side. So right now you're going to be about 9 pennies out of the money. And the bullish side of that contract is costing you about $17. And I'm just jumping to the bearish, 2025 down to 1875. That one cost you 47, so $63, $64 for the two sides of that, with about a almost 35-cent head start to the downside right now. So it's tough when they don't line up. We're 1990, but a little bit of volatility for sure. So what is the whisper?
The whisper number we got, what is that, 1.3?
13 million.
13
How about
million barrels. Survey number is 12 million.
Okay, 12.7, yeah.
Okay, so this is in. I'm going to go lower here, man. I think this oil contract's going to pop, because the way this is set up is that when you look at ExxonMobil, here, watch this for a second, folks. If you look at ExxonMobil and Chevron, now these are the top dogs that led the oil market down. I'm talking about for a couple years, and these aren't, you get Exxon down $2, but, there's not enough juice on this on the way down. So it's almost, and Chevron, CVX, Same thing. It's down $4, but you're off lows of $51 and you're at $80.
Yes.
So I'm going to go the opposite way on this, meaning
Sure, you're looking for a
lower build. So
yeah, less supply for a bullish spike in crude, right?
So I'm going to go with 10. Yeah, I'll go with 10.7. Would that be right? 1, 2, 3,
That would be right.
Okay, 10.7. So that's going to be bullish. We'll see where that checks out.
Yeah. How about gas inventories? Can you just click on that to see what the whisper numbers?
Gas. We're at, right. Let's see. Natural gas. Oh no, gasoline. You mean, right?
Yes.
Yeah.
Yes. Gasoline.
Okay, so they're at.
Okay. 7 to 8 million.
Yeah. Okay.
What do you want to throw a bit in there?
Yeah, I will. Let's see.
We're going to be paying cheaper at the gas pumps or more expensive.
Yeah. Let me. I got to pull up that quote though. 1 second.
Sure.
Gasoline futures. Gas. Okay, here we go. April. No, I don't want April. I want May, right?
Generic first gasoline? Maybe generic first gasoline?
Yeah, I'll try that one. That's good enough. Okay, so 71 cents.
Look at that drop, man.
Yeah, I know. Pretty amazing. Well, we never got that drop when that thing went down to 37 cents, right?
I'm right. I know. They didn't quite adjust things to there.
That's pushing with volume, too. Okay, so that's telling me, let me see, whisper. So we're going to go with a little less there, too. Even though I think the gasoline, I don't think anyone's been running around in gasoline, that's for sure. But
right.
Okay, so I'll go with 63. 63.
There you go. 6.3 million. 6,300. Yep.
Hey. We'll see what this baby's going to shake out, man. I mean...
Hey, how about Tesla? Can we jump over? Speaking of gas, electric vehicles.
That's going to be driving people out of their mind.
I think it was Goldman that gave them an upgrade with a price target, 800 plus. And, yeah, there you go.
Yeah, Goldman says buy Tesla and stocks with electric car exposure. The significant pullback in U.S. auto stocks creates an opportunity for investors to own long-term growth names, including Tesla and other companies exposed to electric vehicles. Even with gas at about $2 a gallon, the total cost of ownership of electric cars is already competitive with vehicles powered by traditional internal combustion machines in select categories, like mid to high-end cars. The thing that must be driving people crazy, Tom, is that you got gas at $2, and why is Tesla going up? I mean, it's going up, folks, because it's a great car.
Right, and that's what the analyst is saying. Is even at $2, it's going to be competitive by price, and it's going to keep going that way. Batteries are going to get cheaper. Combustible engines are going to have to make sure that they're not pumping out as much CO2 5-10 years down the road. And that analyst said from 2% of the market share, they're looking for 15% in terms of electric vehicles in 10 years. That's a lot of cars, man, for electric vehicles. If they get, almost 2 out of every 10 are going to be an electric vehicle on the road in 10 years.
Yeah, listen, that's pretty amazing.
And that seems completely feasible. I wouldn't be shocked if they made it to 20 or 25% in 10 years. I really wouldn't, because they're going to be great cars. They're going to be everywhere, and yeah.
And that means, folks, what you want to do is you want to buy an internal combustion machine and keep it in your garage and give it to your children. Because that
collectible cars have had a great run recently, haven't they? I think they have in general. Probably for similar reasons,
Yeah. I mean, it's if in fact if there's no internal combustion machines around another 34 years from now, that's what will be worth some bread, man. Do you know what I mean?
Sure.
Yeah. Let's take a look at some of the higher volume equities out here inside the marketplace. The S&Ps are just hanging right at that 85, 84 level. You get American Airlines, they're down, they're flat, they're down 3 cents. You got a Delta.
The airlines are flat. Not to jump in, but did you see how they announced their deal yesterday?
Yeah.
These stocks were up a lot of money pre-market.
Right.
Okay, yeah.
No, it's so they made the deal with the government.
Yes.
And let's see. So American Airlines get 5.8 payroll support from the Treasury.
Okay.
You know, big money. Hey, if you want to see something, I sent this to you yesterday, Ruth Chris. Watch this, folks.
Yes.
Okay, this is pretty intense, but it is what is happening out here. So if we pull up Ruth Chris, what you're going to see out here is that it's at $7.87, right? We'll go through this as soon as we come back because you really want to wrap your head around what's going on here. And Ruth Chris already got the first, and this is the payroll protection program, folks. They got $20 million. They were the first ones that disclosed it in a public, because they're a public company. But I want to go through this because what I want to show you, this is through J.P. Morgan Chase. The bottom line is that they already had loan agreements with J.P. Morgan Chase, and you can see that all these banks are going to make sure that their clients that already owed the money, they're going to put theirs in first.
Yeah.
Right? They want to get paid. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Oil inventories rose 19.25 million barrels.
Is that a lot of barrels?
Oh, my God. The medium estimate was 12.7. Let's look at this again. That is one monster number, man. Past events.
It sure is, man. 19.7, so almost 20 million barrels. The price ticking down a bit. I have the live contract up there. Pretty muted response, man. The market just, I guess, in oil you're trading with a $19 handle in crude, right? Of course, they know that times are rough, I guess would be what you say when crude is literally unchanged on 20 million barrels for the inventory number.
Oh, there's no doubt, man. I mean, that's pretty intense. Let's see, crude inventories. Oh no, past events. I need past events. Oh, I don't know what. Oh well, it doesn't seem to want to cooperate right now.
That's all right.
Let's go. Let me just look at ExxonMobil and Chevron, see what that did inside of that. So 39.80. Yeah, you're at lows here, and Exxon. Nothing heavy though. Same with Chevron. This is something, those equities are something to look at. It's going to get intriguing here, man. And this is when it seems like everything's so dire that I've been bearish on them for a long period of time, because if you want to just see how they let it down, folks. Okay, this is crazy, man. I mean, you go all the way back to January 3rd, and Exxon was at 71. But watch this. If I bring this back just years, you can see that. I mean, this has been going down since 2014. Isn't that crazy?
Yeah.
$104 down to 30. And you're talking about, I don't know if it's the largest oil company in the world. If it's not, it's between them and, you get a Brazilian company that may be bigger, but there's so much corruption down there that that Pemex never went anywhere because they with so many problems, but it's pretty wild watching that baby shake out, no doubt.
Hey, how about the article? Did you send it to me, or did I think I just saw it this morning, just from Bloomberg. I'm not. Oil glut may overwhelm global storage tanks within weeks. So that was a 4 a.m. I think article this morning printed out there, and it's just saying demand set for biggest annual decline in history, says the IEA. Goldman and Gunvor say storage space will soon be exhausted. They kind of get into it, and 20 million barrels. You see why, man? That's quite a surplus build with the price we're at, and just something remarkable that we might be full, and then of course the price is going to come down when you can't even store it.
Yeah, there's no doubt. There's no doubt. So if we get back to Ruth Chris for a second, folks, I forgot we were talking about that. So what happened with Ruth Chris is this, right? And we're going to see this. So the SEC came out and said, hey, listen, if you're taking government money, that's a material fact. You think we should disclose it immediately, okay? So last night, Ruth Chris did disclose it. And check this out. This is pretty amazing. It makes sense, okay? But the bottom line is that you're going to see, if the Congress doesn't come up with more money, it's going to be the big companies that still get the juice out of this in a big way. So the maximum that you could get, folks, per company was $10 million. Well, they got $20 million, because what does happen is that it's not a flaw inside the deal, okay? If you do have a couple different companies inside the company, each company is an individual, okay? The bottom line, they had two separate companies inside their hospitality group, because they're really a franchisee, right? Sure. So the kicker here is, which is pretty amazing, is that they got this money, right, in a week, okay? And this is when J.P. Morgan Chase was saying that J.P. Morgan Chase, I get an account there, they only opened this thing up, okay, about 5 days ago. And even when it's opened up, you're still in queue in line. But what you do have here is this. This is how this thing is shaken out, is that if you have already had loans from those banks, those were the first ones that the banks are taking care of. And I can understand why, because the bottom line is that they're owed money, and so they made sure they jammed those through immediately, right? Yes. But you can see, when you start taking a look at $350 billion, and you start banging out $10 million at a time, that's not a lot of. That's not a lot of money, right? Right. That can go real quick, man. For sure. I saw that come across, and I says, "Oh man!" And we'll see how many more are coming out. Let's go to Paul in Florida. Hey, Paul, what's going on?
Hey, Tom. Long time no talk.
Yeah, how you been, man?
All righty. I sent you an email. Did you just get it?
I don't.
Oh, you don't do that? Okay. Yeah. Well, it's about MGM. Here, what I wrote was, I said, hi, can you explain the short position in MGM, why this is acting so strong for no reason at all? What's holding this thing up over $10? Using Bud's PTRs, I figured it trades for $4 PTR, and halfway is about $2. So why is it so hard for the shorts to crush us back to the 10 area? What's the short position now? It was about 17% a week or so ago. I think it's around 4 now. You know, with no gambling anywhere, doom and gloom with the virus and everything else. You know, what's a good entry point for a long-term hold on this thing?
Okay, so let's take a look at it. So you have, just as you said, there's only 3.4% short position. 46 million. This is, I mean, the stock already got destroyed. The stock already came down from 33, right? I mean, if you're looking to buy it, if this backs into like
13.
Yeah, even 1307, yeah, with light volume. Let's say
there's a big gap, like, But okay, let's say, like we just said, it was like 17 or so a week ago. Now it's like roughly 4. During that last week, you can see where they hit it hard, but then they keep it going up. How does that work? I mean, why wouldn't they just keep hitting it?
Well, they're just looking at this that, someone thinks it's a good deal. Now, This is what does happen. Now, so check this out. This is a great question. What's also happening is this: MGM, okay, has been on the ropes for a long period of time. Now, what happens is that when you're on the ropes, they probably have been putting things in place way before this coronavirus came in because they're on the ropes. Do you know what I'm saying? So
they've got about well, they drew down like about $1.5 billion credit, before banks could shut them off, and like they've got about as much cash as Sands and Winds, and they're not hurting that bad as far as that goes. They got at least $4 to $6 billion.
Yeah, well, I guess my point is that they were hurt before this even got there. So that would say to me that they've been taking action in order to save money, So, a
couple of weeks ago, like a lot of insiders bought, like one guy bought like millions of dollars worth of stuff, But
when that happens, just make sure that millions of dollars worth of stuff. You want to know who bought it to understand. Is that a quarter to him, or is that like a dollar to him?
Yeah.
And the correlation of what he has, right? Do you know what I mean? So.
Yeah. But what would you say for a long-term hold in this?
I would say that if you get a pullback to this, the benchmark there, I'd look at that 1197. That's the day of April 3rd. You can pull back there with light volume, and
it held. Go ahead.
That's not a bad risk reward.
Yeah, it held the 12 for a long time. And then
have a great one, man. Have a safe one. Stay right there, folks. Tell me and I come right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow off 649, Nasdaq off 172, S&P's off 84. Let's go over to our man, Mr. Teddy Cakestad, as you do each and every Wednesday at 40 past the hour. You can reach Teddy every trading day, folks, at forex-trading-unlocked.com. That's forex-trading-unlocked.com. Teddy Cakestad, what's going on?
It's snowing in Chicago. That's what's going on.
Is it really?
I swear to God, I just got done with a 5-mile walk in the snow. I swear to God.
That is April 15th, and it's snowing in Chicago. Oh, my God.
And it was 65 on Friday.
That's sick. That
Good
is
for you for getting 5 miles out there, Teddy. That's good stuff in the snow, man.
So, well, because of that, remember last week we had those signals? Well, we reversed gears overnight, guys. So those signals all ran their course, and luckily we're nice winners. And the dollar right now, today's a very interesting day. We always hit really good days to talk.
I know.
There's either a profit-taking move going on now with a little reversal gears with the dollar getting some strength, or we are setting the beginning of a new wave for the dollar bulls to head off. So I think it's going to be indicative of how today settles, and we'll know there's like right now, if you remember we were talking how your lesser currencies now are just getting steamrolled by the dollar,
yes.
and the coronavirus is definitely driving that. Like the U.S. dollar, Turkish lira today again just blasting through new highs. The Mexican peso, we hit a buy signal on Monday, and now it's starting to follow through, and it's probably because their cases went from just under 1,000 a week and a half ago to just under 6,000 yesterday. So I don't know what their totals are now. So they're kind of, I think, going to catch that trade still, And then you look at like the euro and the pound. The pound was very, very strong yesterday, and it reversed gears overnight in a big way. Then also same with the euro and the Swiss. And I think it's because most Americans forget that when we went back to work on Monday with the markets, the European markets didn't open really until yesterday.
That's right, Easter Monday. Yeah, right.
Right, exactly. So I think that Monday was more of a just kind of our trade and a little follow through, And I think that today, when we look at how we settle, it's going to be very important, because if the euro US dollar was to settle, like if we were to do a snapshot right now and all the major currencies settled where they're at right now, then you would have a sell signal in the euro US dollar, you'd have a buy signal in the US dollar Swiss, you'd have a sell signal in the pound US dollar, you'd have a buy signal in the US dollar Canada, a buy signal in the U.S. dollar yen. I mean, I think you're getting my point here is that every major currency will have a buy signal for the dollar and a sell signal for the counter cross, and it's already been driving by the lesser currencies with the Mexican, the dollar versus the peso, dollar versus the lira, dollar versus the real, and blah, blah down the line, So I think that, especially with what Trump did with the World Trade Organization, with where now dollars are not going to go to the World Health Organization, I think we're really going to start to have a currency war, that's going to develop. And I think the world has to figure out, do they have value in the yuan or do they have value in the dollar? And it's going to start to be, what is America doing, And it's going to start to really, I think, shape a lot of fundamentals in trade. I don't know where it's going, guys, but I think we have some big moves that are about to happen.
It looks like, I mean, this dollar, Teddy, right? I mean, we were up at 99,976. I mean, this thing is on the verge of breaking back inside that lower range again, which is 99,626.
Right, and we have oil too that's on its lows again. So this is kind of a big deal. It's almost like we're going back. We're done with the stimulus stuff and blah blah blah. And I remember a couple of weeks ago, you guys were. I listened to your, before I go on the air with you, and you guys were talking. We could see oil at $16, $18 before we really find a bottom. So, and if that's the case, we probably will get another spike in the dollar as well.
What do you think? Why? Like last night, I guess because it's the maybe they opened back up because that euro. I mean, the euro is what's really driving the dollar. I mean, the euro got smoked this morning, right?
Yes.
So what do you think is behind that? Just that really they got active again over there, or what?
I think that that is definitely part of what's going on, but I think that it's just a matter of remember how 2 weeks ago we said we've gone through all this major volatility, and as the VIX starts to drop and implied volatility in options is dropping, even though we have these wide ranges, it's like we're starting to absorb all the news, like the coronavirus fear. We know it's here. We know it's in the markets.
Right.
We've had such a shock and so much volatility. I mean, the month of March, all we got to look back is at that. It doesn't matter what market you're talking about. It was crazy, the volatility.
Sure.
So it's kind of like an EKG, like when you have the really big spike and then you have to come back to this before you get another big spike. I think we're now in that we're not flatlining by any means, but I think we're starting to set some ranges right now and see where is strength really going to come. Are we going to see flight to quality eventually come into the European currencies? Is Europe going to come out of it? Because then I can see that we can have a short-term rally in the dollar, and if things start to flatten out in Europe and they really go online with Germany, Spain, and France and Italy, then we'll probably see a reversal again. And you'll see strength in the euro, strength in the Swiss, flight to quality in the Swiss. But I don't see that yet until they truly flatten and open up, and we see numbers where they're decreasing. I still think the dollar is gonna be winning overall.
Yeah, no, I mean, that strength out here this morning was pretty incredible. And the give up. The give up, well, just as we're talking, okay, so it just jumped back inside the lower range, man. So this is going to get intriguing, because then it's like, okay, was that just a spike?
Right.
I mean, because we're consolidating here. You got this is... I'm telling you, man, these currency markets, man, is something else. Seriously.
The volatility is crazy, isn't it, guys? I mean,
it is.
Think about the little traders who are used to, it doesn't matter whether you're a big trader or a little trader, but even the smallest traders now, if they're catching moves, they got to be like, oh my God, I never made that much on a position before.
Right.
Right. So
there's no doubt. There's no doubt.
Absolutely. So, and I think, what do you think about the gold? I mean, I still think that with that volatility there too, it's another reason for the dollar to keep on spinning right now. I don't think that the gold is going to give up its fight and keep on edging higher right now.
Yeah, to me, I got a price projection right now of 1804. We made 1785 yesterday, 88, and gold this morning already rejected lower price at 1731, and it's going to be lighter volume than we're going against. So that could be another monster ABC up, and if it is, that'll blow away the all-time highs.
Well, here's another theory I have for gold too, is that you got to think about where does cash go, and when it goes, when the people who actually invest in commodities. Right now, you're not investing in a lot of ags because there's a lot of ags that are slacking right now because of what's going on with the shutdowns.
Right.
So if you in the CRB, where do you go? You can't go to oil right now. I mean, what it's costing so much to store, and there's so much of it. You're cannonballing yourself. So where do you go? I think the metals might be the one place where, at least in the short run.
What you're hearing here, folks, is you're hearing experience from the pit. That is so cool, man, what you just said, because I know what you're saying. I mean, I'm more so equities and the S&P futures, but when one sector goes, I go to the next sector. One sector goes, I go to the next sector. You got to go. It's going to move.
Right.
So I can imagine what you're saying. It's a fact. Do you know what I mean? It's yeah.
You mentioned commodity. Look at pork bellies right now, bacon and stuff like that. Because restaurants are closed, you would think everyone's home, so everyone's making lots of bacon.
Right.
But think about how much bacon goes to waste every single day in America from restaurants.
Totally.
Yeah. So the price of pork bellies is just dropping because there's so much bacon on the market, which is a good problem to have, I think. I think it's good for us.
I agree. I like my bacon. They just had BOGO bacon at Publix yesterday. There we go.
Nice. Take care, guys. guys. Thanks a lot.
Thanks, Teddy.
Teddy, thank you so much. Folks, you can reach Teddy every trading day at forex-trading-unlock.com. Have a great one, man. Stay right there. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as a #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 624, Nasdaq's up 144, S&Ps are down 80. If we go to Occidental, folks, I want to show you something here. This is very unusual for a big equity. You got it down $1.78 right now. You're trading $13.11. And what you're going to see out here, this is they issued today to Warren Buffett 17.3 million shares. So what happens here, folks and Tom, is that the reason I'm saying it's unusual, normally this happens with penny stocks. And what it is, it's almost a death keel. And we'll see how this shakes out. Occidental owed Buffett a dividend when he basically backed them when they bought Anadarko at $65, okay?
Yes.
And what ended up happening, they had the choice of doing the shares. And that's what they did. And the problem with that is that every time that you issue shares as a dividend, right, you are diluting every other stockholder.
Yes.
And in this case, you know, Occidental has 900 million shares outstanding, and they just issued 17 million. So this is going to be intriguing going forward, folks, as to what will happen here with Occidental. You know,
yeah, not the mark of a strong company, right? When that's what you're doing.
I'm sorry?
I said not the mark of a strong company when that's what you're doing, to say the least.
Exactly. That's why most of the time this happens with penny stocks. You know what I mean?
Yeah.
You make a deal with someone, I make a deal with you, I keep giving shares. It's unusual that this is happening here, but bottom line is it is. And I'm sure he's got to get a lot more dividends than that just to get break even, because he's a lot higher.
Yes.
Folks, stay right there. We got Think or Swim coming up next. I'm Mr. Basil Chapman. He's doing an outstanding webinar right now. Then we're going to have Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.